In this video, I'll be doing a full walkthrough of the dashboard within the Analytics tab of Shopify. This is the default setup that you will get when you make a new store. Note that you can come up to the Customize button in the top right corner over here and actually change this layout, but this is what you will have at default. I'll also be providing you with the 3 most important metrics on this dashboard that you can use to troubleshoot all revenue dips moving forward in time. As someone that's not that familiar with the dashboard within Analytics, there are a lot of pieces of information here that are either incredibly misleading or aren't just really that helpful for you to even be looking at. And so it may lead you astray in your decision making or where you're putting priorities. And so we'll be touching on every single box throughout this entire landing page and pointing you in the right direction so that you can focus on the things that matter and not the things that don't. Starting off with all of these sales-based icons. And so we have gross sales up here, we have total sales over here, and then we also have net sales over here, which gives you the total sales breakdown. These are all helpful uses of contextualizing how much revenue the business is generating, but none are an actual good measure of gross income within the P&L. The most accurate way to understand cash collected within the business is to take net sales and add it to shipping charges, what also used to be called shipping collected. The reason for this is total sales includes tax, which is a flow-through expense. You likely don't want to include that in any of your calculations on profitability. Gross sales doesn't include any discounts applied at checkout or returns. Now, taking out discounts is absolutely essential because that is not cash that is collected. Taking out returns, however, that's a questionable one, and for some clients, we even add returns back into our reporting, so we don't include it. And the reason for that is because returns will appear within sales over time on the day of the refund, not the day of purchase. And so what ends up happening is you might ramp up your advertising spend. This particularly happens if you're in fashion. You see a massive ramp up in orders. You have a fantastic month this month, and then next month, 20% of those orders go on return because they're the wrong sizes. It isn't what they expected in the product. And then you have this massive revenue dip in the following month. And so it looks like, advertising has fallen off, MER's gotten worse, blended CAC has gone up, everything looks terrible. But it's just that there was a delay in the returns that were processed, which skews all of the data, and it gives you bad data for making marketing related decisions. And so separating out returns is sometimes really important if you do have high return rates. But the best measure is net sales plus shipping charge. The next one up the top here that you have is returning customer rate. This shows you the percentage of orders that came from returning or existing customers over the time frame that you have selected within the dashboard. It's really important to understand that this misleads people enormously to how loyal their customers actually are, and they interpret this number wrong. I'm not going to go into too much detail on this in this video. Instead, we actually already have a video on this, which is called "This Shopify Metric is Misleading You, Customer Return Rates." And by far, this is the most misleading metric that you'll ever look at within Shopify. And so if you want more details as to why, I would strongly recommend that you go and watch that video. To summarize it within one sentence is that this does not show the amount of people that come back and buy again. It shows the amount of people that are buying again in proportion to new customers within this time period. And so it gets significantly skewed upwards if you have low customer acquisition at the moment. It gets skewed downwards if you're scaling quickly and you have strong customer acquisition. And it is not a good measure of how much profit or revenue you are going to generate over the lifetime of a customer. Cohort analyses are way better for that. And so we'll be touching on that, which is lower down in this dashboard. Orders fulfilled in orders is very self-explanatory. Orders is how many orders you've received over that time period. Orders fulfilled is how many you've marked as fulfilled. And so for these guys at the moment during this time period, the difference between these two is the amount of orders that have not been shipped out yet. Moving through, we then have average order value. It's important to understand that average order value here is gross sales minus discounts divided by orders. It does not include shipping charges, which in my opinion is a little bit silly. Shipping charges is cash collected within the checkout. And so in my opinion, it should be counted at average order value, but it isn't. And so if you go and layer in free shipping, or if you go and add shipping charges in here, it won't actually be reflected in the average order value displayed within Shopify. And so you need to make sure that if you are actually collecting a lot of shipping at checkout, and for these guys, for example, they're collecting about 7 to 8% of their revenue at checkout. We likely want that reported in average order value because their average order value is actually 7% higher. Now, we have a video that dives into average order value. It's called the expert approach to average order value, which goes really deep on this metric. The summary of that video is that this number is helpful for you understanding, okay, what does the average order value look like? And this is a measure of mean, not median. And then that's about it. It actually doesn't give you much help on pulling any action items off the back of it. I would not go and make changes to your business based on this single number, because this number in isolation tells you almost nothing. You need to understand the distribution across the curve of this. You need to click into it and understand new versus returning customer AOVs. You need to understand the product pathways that are occurring to get people to specific average order value trenches. There's a lot more that goes into planning and execution around increasing average order value and improving this metric that we won't go into in this video. But it is a warning to say that this is helpful for giving you a little bit of a top line view, but I would not be making any action items and next steps just based on this number alone. Over here, we have sales channels. Self-explanatory. If you sell across multiple sales channels, not just the online store, you might have POS. Shop is Shopify's actual shop app. Draft orders, they all appear in here as well, so you get a breakdown. In most cases, if you're working with an e-commerce partner, you just want to be holding them accountable to online store revenue, if that's the primary driver of what paid ads is doing, in which case you want to make sure that all of your reports is always filtering just based on online store sales channel. Over here, we have total sales by product. I'm not going to go and click over there because I blurred out the information, but that's obviously showing you the top performing products. Helpful once you click into it and actually get a full report. At a glance and an overview, not really that helpful, just seeing two products and how they're selling. Moving through, you then have sessions over time. Really important to understand that sessions over time is actually going to give you a different number to what Google Analytics will give you. So it's always good to use both in all of the analysis that you do for conversion rates and session fluctuations over time. Why is there a difference? Google Analytics does a much better job at not counting bot traffic. And so you'll generally see that the Google Analytics session count will be lower than Shopify because Shopify, for whatever reason, decides to keep all of the bot traffic that hits your website. And so what that ends up trickling into is your conversion rate that gets provided to you by Shopify is kind of incorrect. Because, for example, this brand had a massive dip on January 26th, but this might have just been because bot traffic spiked. But we actually don't know because we don't have clarity over that bot traffic, and so that's where you'd want to go to GA4, or you'd want to go to some other reporting platform that counts sessions, and just double check that it's getting similar sessions as to what Shopify is picking up. Over here, we have the funnel breakdown of the amount of people that hit the website, to add to cart, to reach checkout, to complete purchase. This is one of the best snapshots to be looking at to be able to troubleshoot your checkout process. It is so common to see quick wins throughout this funnel where there is a massive drop off after add to carts or a massive drop off after reach checkout, and we can quickly identify that something was below the fold or something wasn't positioned right to where it wasn't intuitive for someone to get to the next step in that checkout process, and through fixing that, we've immediately increased conversion rates by 40 to 50% overnight. And so it's really important to be troubleshooting and looking at this. Does it line up for your industry average? A general average drop off here is something like a 4-to-1 ratio. So for every 4 add to carts, you should expect 2 reach checkouts and 1 purchase. But we have seen really good success with a lot of clients actually shifting that to a 2-1-1 ratio, where for every 2 add to carts, we expect 1 checkout and also 1 purchase. And so there should be actually very little drop off between checkout and purchase. This is more for FMCG brands as well as low ticket brands. You generally see a lot less drop off here, but you want to make sure that you're continuously optimizing this funnel as well. Coming down to session types, this is going to break down mobile, desktop, tablet, other. No real core information in this snapshot in itself. I wouldn't pay much attention to it. Sessions by location, this can be incredibly helpful for identifying bot traffic. However, you'll need to click into the report and sort by individual cities to be able to see if there's a spike in a particular city, which often means that there's some kind of server that's hitting your website a lot and is causing bot traffic that you might want to exclude. Total sales by social referrer. This is something that you absolutely want to completely ignore. This is not accurate. It is not helpful. It does not drive decision-making. Attribution is a futile effort, particularly if you're going to go and use tracking reported to you by Shopify. This will end up making you make bad decisions, go around in circles. You should not use this section at all for decision-making. Further, sessions by social referrer, do not use it. Top referrers by session, also not helpful. I don't even know what this is, but I blurred it because it definitely isn't helpful. Sales attributed to marketing, once again, not helpful. Anything to do with attribution to marketing channels, ignore. It is going to mislead you in the direction of optimization and scaling the business. You then have a cohort analysis. On the surface, this is completely useless and does not help you at all. However, once you click into it and open this up as an individual report, this is arguably one of the most useful reports that Shopify has ever rolled out. Could it be better? Yes, I think it could be. In fact, we have our own custom models that, in my opinion, do a much better job than Shopify at pulling together cohort data. But for Shopify Analytics, which is relatively rudimentary, it's actually an incredible resource. And I'm also proud to say that we have the #1 ranking video on Google for how to use a cohort analysis in Shopify. And so if you don't know how to use one, just search for it. We are the #1 ranked video on YouTube and Google for this particular search term, at least in Australia. And so that's one of our best performing videos of all time. People find it to be a really strong, comprehensive analysis of how to use a cohort analysis. You will need to watch that video if you don't know how a cohort analysis report works. Just opening up a cohort report, the first time I did it, made no sense to me. I had no idea what was going on. And you likely won't be able to figure it out yourself unless you actually go and watch a tutorial like that. So I'd strongly recommend going and watching that tutorial. And I'll make sure to link all of this in the description below as well. Session by referrer, total sales by referrer, these things really aren't helpful. Product sell-through rates, incredibly helpful, particularly for more advanced inventory planning and strategizing on maximum growth rates. We actually have a really good video coming out on this at some point next week, which is about the fact that your EBITDA percentage margin, your net profit margin, is directly correlated to your maximum possible growth rate. And so you are limited in how fast you can grow based on what percentage net profit you currently operate in, because you need that percentage net profit to fuel future inventory purchasing and your cash conversion cycle. And so growth is completely limited based on your cash conversion cycle, and sell-through rate is an input of that. And so understanding what sell-through rate is, how it works, and then tracking that at a product and a category level is absolutely critical to yielding better dividend draws out of the business so that you can tighten how much inventory you have to have on hand, you can increase your sell-through rates, and you can also decrease your cash conversion cycle. It is such an unbelievably important component of e-commerce that is completely overlooked, particularly by new beginning e-commerce brands, because it becomes a little bit more of a complex topic. But this is hidden all the way down the bottom here and is an incredibly helpful report for being able to better manage your cash flow. And we then have some POS analytics down the bottom. I'll leave you in this video with the 3 metrics that matter most anytime revenue dips and how to troubleshoot it. Total sales, or at least let's call it net sales plus shipping charges, equals total sessions times conversion rate times average order value. And so you can decompose sales into these 3 levers. You've got average order value, you've got conversion rate, and you've got sessions. And so if sales drops, it's because one of these 3 dropped, or all of them dropped simultaneously. It is physically impossible for your sales to decrease and for sessions, conversion rate, and average order value to be the same or to go up, unless you had a bunch of returns. That's probably the only exception to that rule. And so when revenue goes down, look at those 3 metrics. What happened? Was it average order value dropped? Okay, why? Did we start pushing to products with lower average order value? Was it conversion rate dropped? Okay, why? Is this natural variance and fluctuation that occurs within the business over time? Or is there an actual special reason as to why this happened? Did a shopping campaign spend less today? And shopping campaigns are a great driver of high converting traffic. Sessions, did they go down? Oh, they went down. Okay, that's probably directly correlated with paid media spend. CPMs probably went up, CPCs went up, or spend went down. And so immediately look at paid media. Why did sessions go down? If all of these things are stable and it's just a 5% dip in average order value and a 4% dip in conversion rate, which is then magnified into a 10% dip in top line, it's probably just natural fluctuation, and I wouldn't be too concerned. And so don't stress too much about single-digit point percentages across a few of these core metrics because they compound into the total sales number going down. But these are your 3 metrics that you can use as a really simplified framework to be able to troubleshoot revenue anytime you see it down, or if you see it up. Why did it go up? Was it sessions went up? Was it average order value went up? Or was it conversion rates went up? As mentioned earlier, I will link out in the description below to the cohort analysis video. I strongly recommend watching it to get a more thorough understanding of how to read a cohort analysis. It is by far one of the best tools that is available within the suite of analytics in Shopify. And I will also link out to why customer return rates is the worst possible metric that Shopify has in their dashboard and why you should absolutely ignore it for decision making.